Hey, Troy Boy here. Gonna be talking about investments 101 and what my take on it is. Had a few requests here and there, and I have a blog, but it's better to look at a video of me talking with some presentation and some drawings and stuff like that rather than me writing a long ass paragraph. So, make this channel, let's see how it goes. I'll get into streaming and all that, but that's another talk. Anyways, it's gonna be a one take, so it's gonna be quite lengthy. um, Hopefully I can put some timestamps in so it makes it easier for you to skip parts that you don't really want to hear about because you already know, but we'll get straight into it. So let's change it up. And whoa, this is crazy. How do I change it? Oh, yes. Anyways, okay. Using Prezi, intro, Troy Boy, random guy on YouTube, talk about investment. Let's go. So, why invest? Who invests? Why do people invest? Well, first of all, rich people invest, obviously. A lot of rich people got their money from investments in some form, property, businesses, stocks, and all that kind of stuff, commodities, cryptocurrencies, and all that. Rich people mostly get their money from investments of some sort. Anyways, smart people. Smart people, I guess that's a bit more subjective. Like, I'm talking about people who know they have potential or the skill sets or something that can make them thrive in the investment kind of community, and they kind of get into it, they reach their potentials in the investments, and they get a lot of gains out of it. Smart people will realize, oh man, I just can't get rich off salary, and I just want more money, and I want to do more things, I want to travel more, all that kind of stuff. Smart people will get into it because that is the only way to get rich, not wealthy. You can get wealthy from salaries and just normal life, normal no investment life. You can get wealthy, but you can't get rich. We'll get into it. We'll get into that later. But anyone who wants to be rich, now that's the problem, right? A lot of people get into investments because their friends are doing so well. They see all these investment like inspirational videos on YouTube, and they're like, oh, I should invest as well, and they get into it and they get wrecked. I mean, that's 99% of new investors. Really, the 1% that actually studies, research, and all that, they get through the next stage and they actually make money, like what it's supposed to be. So yeah, I mean, I'm part of that small group, I guess, that did well in investments. It was total fluke. I might talk about it, might not, but yeah. I started in like commodities and forex. You know, you can already tell it didn't go so well. I also did some leveraging as well. Rough start, but it ended up well. We'll get into it. Banks don't make you rich. I hear people saying, oh, if you put money in savings and all that kind of stuff, you can get rich. No, you just can't. I mean, yeah, you'll get wealthy. As I said, banks, if you're putting money into the bank, it's normally stuff coming out of your paycheck. You're not getting that much to become rich from a paycheck. And you putting into a salary, what? So, you putting like a portion of your salary into savings account, that's not going to cut it. Banks aren't dumb, as I say here. Banks aren't dumb. They're just going to cover inflation. We'll talk about inflation and recession soon. I got a slide for that. But yeah, they're not dumb. They're not going to give you free money that easily, or else everyone will be rich because everyone has a bank account. Simple as that. Salary doesn't make you rich. Yes, it makes you wealthy. It really depends what rich is to you in the first place. For me, rich is like 7-figure, 8-figure, not like 5 or 6 figure. Like, for me, that's not cutting it. obviously when I want to be rich, when I say I'm going to be rich, I'm saying 7, 8, not the mere 6. I can get 6. I mean, I guess that already makes me kind of, fortunate enough to be in the environment. I'm an IT guy in New Zealand. I'm fortunate enough to make that kind of money. But, you know, different people have different standards. Let's put it like that. But for my standards, rich 7, 8 figures. My salary's mostly not going to cut it. It's going to take me quite a while for me to hit 7 or 8 just purely by working. So yeah, you got some exceptions. Obviously CEOs, they get paid, banks, especially in big companies, they get paid millions or 10 millions. They get paid quite a lot. Obviously, they're paying like half of it as tax or something like that, 40%, whatever, 33%, something like that. But either way, you get paid a lot. But yeah, I mean, how easy is it to become a CEO? Not that easy, pretty hard. So let's take that out. IT industry in the US, yeah, sure. I mean, you get paid a lot. Facebook, Google, Microsoft, Amazon, but what's the chances of you or like a normal person getting in there? Quite slim. It's not that easy, let me tell you. So yeah, that's exceptions. But either again, you're not gonna get too rich. Your salary is quite limited in the high ranges. Once you hit a few $100,000, you're gonna be quite limited, unless you're like a CEO or like a business owner. But if you're a business owner, that's an investment. You're not an employee, you're employer. So that's a different story. I'm talking about employees. You're working under someone. We'll get to that. How do you prepare for a recession and inflation? Now, recession, a financial recession is like a depression. So pretty much what that means is when a country's debt is too high, it gets to a point it's unsustainable. It just starts collapsing. Currencies drop like heck, especially in the countries that are mostly affected are normally like places like China, US, the bigger countries. They get affected the most in recessions, and smaller countries like New Zealand, I guess, and Southeast Asia, Africa, I don't know, those countries won't get affected as much, mainly because their debt is not that high. They don't overspend. They don't do much in general compared to like US and China and all that big industrial kind of innovative kind of countries. So yeah, we don't feel it that well. Well, I don't. Well, not that I was that old in the last recession in 2008. I was only like an intermediate, so can't say much. But yeah, I don't think my parents felt it even back in 2008. But 2008 was one of the biggest depressions. That was the property, the property just died in the US, I believe, and it just killed everything. But stocks are coming back to its all-time highs, and it went past a lot of them. It's going good. But that's what a recession is. Recession is financially the world is dead. The globally financially dead. That's what it means. And inflation is what you might have heard of, is when the bank starts printing money to cover debt. They're like, oh crap, I can't pay back everything. I'm gonna start printing money, pretty much devaluing the currency. That's why over time your $1,000 or $100 note will not be the same $100 note in like 50 years, 100 years, because the value of that $100 will devalue over time. So what, $100, let's say you can buy a nice wallet. Let's say you can buy a nice wallet with $100 nowadays. Maybe in a century time, in 100 years, you might be buying, I don't know, a meal with $100. It could be like that. I mean, think about it. A house costs like a few $1,000s, like in the 19th century, 20th century. Anyways, yeah, that's how it is. So, how do you prepare for a recession, and how do you not get affected by the inflation, which is the kind of the product of a recession? Is what they normally do is inflate the currency. Is gold. So they move a lot of the cash, a lot of the money in the bank, they move it out and they buy gold. That's a classic thing. Gold is known to be one of the best store of value, and it thrives in a recession because everyone wants to get out of the currency. Secondly, government bonds. Government bonds, pretty much you're lending money to the government. So that's one thing. Yeah, it obviously works during a recession because the government obviously don't have money. The financially they're struggling, so they, all these investors start giving the government money, what they have, and the government pays it back. And it's a bond, and it just goes up in a recession normally. Yeah. Cryptocurrencies now. This is the controversial part. I'm pro crypto, so I believe in crypto, but what they said is what crypto is supposed to be is like a gold 2.0. Like Bitcoin was, a lot of people are like, oh, it's gold 2.0, but we'll have to see about it. Cryptocurrency was only created after the 2008 recession. I believe it was in 2009. Satoshi, we'll see about it. It'll be pretty interesting to see where cryptocurrency lies in the next recession. If my predictions are correct, it should be growing like crazy during a recession. It's supposed to be like a deflationary kind of it's a deflationary kind of currency model. So I mean, we'll see about it. But the problem is, of course, I can say all this, but you can't predict when things gonna happen and all that. So it's really hard. Trust me, it's really, really hard. But yeah, that's the introduction of the things. How do you invest though? How to invest? Well, there's a few things I just wanna get into. Start small and accumulate. A lot of people think they need like thousands and thousands and $10,000s of dollars to invest. That's not true. You can start with a few hundy. I mean, even a hundy, and you keep on accumulating. So every week or so you put $50 and you just keep at it. You just keep adding it. And I guess in that kind of case you're looking at a long term. Short term you'd be like, boom, just take my money into a few stocks that you think is going to rise in the next few months, and you just take it out when it rises. Simple as that. Obviously easier said than done, but that's how it works. But for most beginners, I would recommend starting small and accumulating. There's a lot of mental games and investments, charts, financial charts. I'll show you one later, but they represent somewhat psychology, like how people think. When these trends, they all kind of represent some kind of psychological kind of reasonings behind it. Why do people sell? Why do people buy? Why is the price not moving much? Why is it just doing this, sidelining? Yeah, why? It's all, these markets are driven by people. So, if you know a lot about how people think, and if you can think in their shoes, then it does make it a bit better to understand. I guess this is where TAs come in. TA is technical analysis. We'll get into the words later, but yeah, I mean, it's a massive psychological game, investment. So yeah, I don't know why I said that. Diversification. So splitting your investments into multiple different sources. I mean, there's different types of investments, as I said. There's like cryptocurrency, there's property, there's commodity, stocks, funds like bonds, index funds, all that kind of stuff. Diversifying your investments is reasonably quite low risk compared to the rest. I wouldn't say low risk, but it lowers your risk because let's say if you put all your money into one stock, but if that stock doesn't do anything, or if it falls, you're screwed. You're pretty much screwed. But if you diversify, then if one goes up, I guess, yeah, it doesn't change much. I just paused there for like a stupid moment. But yeah, um, what was I saying? Yeah, that's right. So yeah, but if one falls heavily, but if your portfolio is diversified, then you're not going to get affected by that falling stock or commodity or investment, because you got all the other ones holding it. And if the economic kind of growth is pretty positive in the current state altogether, then your portfolio will grow together, and that's normally what you want to do for your long-term game. Short-term game, yeah, sure, you can chuck it into a few things. You can chuck like $1,000 into a short thing. You got to be very sure. That's very high risk but very high reward, depending on how well you did your research. If it's definitely going to go up, be sure you're getting a lot more reward out of it, but once again, that is pretty high risk. So that comes into long-term and short-term goals. When you're investing, always have goals. If you don't have goals, you wouldn't know when to sell your investments and stuff like that. The greed gets bigger. The greed's definitely overcome you, and you're gonna get wrecked one day. That's pretty much it. So you should have goals and try stick to it, and re-evaluate your goals every week or two, or whatever your terms may be. Remember that. So only invest what you can afford. That's really important. Investments carry a bit of risk. Even the low risk ones, there are risk, and depending on the investment, it might not be a short-term investment, but maybe a long-term. If you need that money right away, you should not be investing in it. You should always cover your needs first, cover your lifestyle first. Try to live quite low-key, I guess, not buying Gucci all day. If you can afford it, I don't have a problem, but if you're working on like a minimum wage and you're buying all this expensive stuff, why are you doing that? Get into that later, but yeah, cover your needs first, then you invest. Some people say invest first and save first. I mean, sure, but I mean, covering your needs should be part of, yeah, needs, not wants. Not like buying Gucci bag. That's not a need. That's a want. I'm talking about needs like food, transport money, bills, rent. Those are needs. Get those out first, then save second, then with the remainder, save and invest. That's that. Then remainder, you can either save more or you can use it. But yeah, that's totally up to you, but we'll talk about that later, how you should be doing that. I mean, there's so many different ways you can do that, but we won't go into that. So finally, don't be greedy. Greed is the number one reason why a lot of people get wrecked in investments. A lot of people don't lose money because they don't do enough research. A lot of people quite serious about their money. It's your money going into the investment kind of cycle there. I mean, a lot of people got to do their research. They're going to study, well, to a certain point. But what really wrecks them over is greed. Don't be greedy. So, buzzy words. Buzzy words. So, they're not that buzzy, but we'll talk about it. I guess the terms might be more towards cryptocurrencies. Just let you know, I'm not formally, I didn't study commerce or anything like that. I mean, investment was all self-taught for me, and I wouldn't call myself like a really, really good investor, but I have good intuition. That's pretty much why I'm still here. But let's get over that. So price, when I talk about a stock price, you talk about 1 unit, the price of 1 unit. So let's say Bitcoin, 1 unit, Bitcoin is 7.5k, is it? I don't know, something like that. 7.5k USD. Then I'm saying 1 Bitcoin costs that much. That's the price. Market cap, I always struggle. Market capitalization, so we call it market cap. So it's just much easier. Market cap means the total money that that investment holds. So Bitcoin is around 130 to 140 billion dollars, US dollars total. That means the total worth of Bitcoin in this world, like the total amount of money put into Bitcoin, is 130 to 40 billion US dollars. That's the market cap. Volume is the trading volume, meaning how much money is going in and out of that investment, pretty much. So how many people are buying and selling Bitcoin? So let's say if the volume is 26 billion, then that means there's 26 billion dollars worth of transactions with Bitcoin. That's the volume. Supply, there's two types of supplies in cryptocurrencies, at least. There's a circulating supply, and there's a total supply. Total supply normally means the total number of units, total number of Bitcoins. I think Bitcoin only will have 21 million max cap, max limit. So they will only have 21 million Bitcoin in the whole lifetime of Bitcoin. I think currently it's at like 18 or 19 million. I don't really follow, so don't take my word, but there's a few million to go. That's what's circulating in the investments, in the exchanges, and what people hold already. And there's a few million that are still yet to be mined. So Bitcoin is a mining kind of concepted blockchain cryptocurrency. Yeah, won't go into that. But yeah, that's the supply. Supply is the number of units. Long and short. Longing, shorting. So some people also call it pump and dump. You know, long or pump means the price is going up, or buying pretty much, and shorting is like selling. So you're selling on it. So meaning you're saying the price is going to go down pretty much. It's kind of awkward to say it because it's long and short is normally like more of like a traditional kind of investments like stocks or commodities or forex kind of terms rather. I mean, you can't really short Bitcoin. I mean, you can short Bitcoin futures, but I mean, yeah, I don't know if you can short Bitcoin. Probably not. Maybe I just sound dumb right now. Anyways, bulls and bears. Bulls are people who buy, and bears are people who sell. Obviously, it is a bit informal. It's more cryptocurrency specific, but yeah, we'll get to it. Pump and dump is another buzzy word. I mean, pump and dump means it's a spike and the price comes back right down. Oh, I just saw something. So yeah, the price comes back straight down. It's normally a group of people, scammy people. They pump the price up, then people FOMO into it. Oh, I didn't put FOMO in. Oh man. FOMO means fear of missing out. FOMO. 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 People FOMO in when the price starts going up for a, like, let's say Bitcoin starts going up $1,000 a day. Then people are like, oh my goodness, I'm gonna buy Bitcoin, and they just start buying Bitcoin. But at that point, the people who initially pumped it, if it's a pump and dump, they'll sell it when it reaches their target goal, and it'll just come down to where it was. And people who don't sell fast enough, you know, they'll get wrecked. And most people who FOMO didn't get wrecked. And the only people who gain any, you know, good money out of it is the people who started the pump and dump. So be careful of that. So how do you build a portfolio? Well, portfolio, first you have to research. You got to do your research. You got to see what you can invest, how much you money have, and what kind of investments you can afford to buy without breaking the bank. You know, remember, only to believe what you can see yourself, please. There's a lot of YouTubers and there are a lot of blogs and Reddit posts and all these kind of things that, you know, people believe things on the internet too much. I personally don't recommend, because it's coming out of people, and it's mostly people's opinions. When they say, oh, Bitcoin is going to hit $20,000 by the end of this year, that's merely an opinion. That's not a fact. Please don't believe it and just buy it. I mean, Yeah, do your research, do your own technical analysis, do your own due diligence, and please just do not believe everything you see on the internet. Make your own decisions, pretty much. Once you know what you can afford to buy and what you want to buy, then you diversify. You try to diversify at least. In the short term, you might start with one investment class, so like a commodities kind of environment, or like a stock or forex, or um, what else? Property. I don't know. You'll start with one, then you'll start spreading out into different investment classes as you get more money. Let's say you have a few $1 million now, then you might even buy a few land or buy a few properties or something like that, and do that while you still do your commodities and stocks and cryptocurrencies. You just got to mix it up, and that's the best way to kind of have a long-term stability, where it lowers the risk and you still get a pretty good yield every year. Yeah, so that's really important. And also within the investment class, let's talk about cryptocurrencies. That's the only thing I'm really investing in right now. There's a small market cap and mid market cap, and there's a large market cap. You can't see it, can you? There you go. So small market cap is a small market cap. I mean, it's very literal, so that means new low valued investments. So yeah, cryptocurrencies, they're like the ones that are ranked like 500, 1000, or anything outside the top 200 pretty much. Small market cap, they have lots of growth potentials. You might have heard penny stocks. That's pretty much small market caps, and you just buy a whole bunch of them, and you just look for few that will just pump so much that you just get so much money out of it, like 10x, 20x, 100x, whatever. Those are those are small market caps. Mid market caps are like, they're starting to get that stability, and they don't fluctuate as much as small market caps, but they still give you a decent return. So the risk to reward ratio kind of it kind of makes it a bit more of a reasonable kind of investment kind of choice. Large market cap is when you want to be somewhat less risky. For example, Bitcoin is number one of cryptocurrency. If you buy Bitcoin, it's quite stable. It does fluctuate a lot. I mean, cryptocurrency itself is pretty volatile, but even within cryptocurrency, Bitcoin is considered quite stable nowadays, at least. Yeah, when it doesn't suddenly drop like 20-30% out of nowhere like small or mid market cap investments. So that's something you need to really think about when you diversify. Normally, what I like to show you is, well, let's get, so this is my pie chart. Normally what people do, this is they're large, kind of like that, medium and small. So I think this is around 50%. So normally a lot of people would go 50% or more on large market caps. This is for the general kind of stability of your whole portfolio, pretty much. You want to have a steady growth for the large market cap ones, where medium ones are, you're starting to get more risk, but also you get more rewards out of it if it actually works out. So this is normally a good 30 to 40, I think. So that's 30 to 40% normally ish. I guess everyone has their own ways. This is how I normally do it. And then a small market cap, I normally keep it between 20 to 10. Oh, it's the other way around. Anyways, you get the point. So yeah, this is how I normally do it. You don't need to really follow that, but this is how you would diversify. It's just a lot safer that way. If I, for example, put all my money into small, and let's say I do 100% small, 100%, yeah, that's no good, because if most of it fail, then you pretty much lose all your money, and it's bound to do that. I mean, small market caps are small market caps for a reason. They're very immature and they're very volatile, so you got to be careful of that. It's very, very, very high risk. Don't say. So diversify. Leave it at that. TA versus news versus intuition. These are different types of ways you can make or initiate into a trade. Now, a lot of people try to do technical analysis. You can't see anything again. Let's move that. Technical analysis is something like looking at the charts, indicators, trends, and very common indicators would be like the RSI, the relative strength index, or the MACD or MACD, whatever you want to call it. Those are pretty common indicators. I can show you some pretty soon. But yeah, so those are something that people look at. Trend lines, like trends, if it's going upwards or downwards, or head and shoulders, all that kind of stuff. I mean, not going to cover that here today, but yeah, those are some things people kind of base their investment decisions on. My computer's making a lot of noise. There we go. News. People read the news. Oh, Bitcoin's going to be adopted by Amazon, for example. Yeah. Damn. That's going to be quite a news. People are going to be like, oh, I'm going to buy Bitcoin. But, how that's quite rare. But yeah, some people do it only based on news or events that's happening. Most people would kind of use the combination of the three things I have here. The last one is intuition. I guess that kind of like goes into more of like with experience. A lot of people have a lot of experience after they do this for like 10, 20, 30 years. They just see things, they just look at it, and they have a bit of technical analysis, and they have a bit of news. They're not entirely sure like, oh, it's 100% gonna go up, but they say, based on what I think, based on all the technical analysis and all the news, I think it's gonna go up, or it's gonna go down, or it's not gonna do much, it's just gonna sideline it. I mean, yeah, I'm kind of like at the bottom, more intuition based. Sure, I do some technical analysis, I do read some news and events, but mine's normally based on intuition. Don't think it's really the best idea to do, honestly speaking. Cryptocurrencies, it's kind of hard to do technical analysis on cryptocurrencies, so I try not to be too much on that kind of side of the things. News, I definitely look at a lot of news for cryptocurrencies, because those are like when a company say, we're going to partner with this and we're going to start using this cryptocurrency, then it's bound to go up if it's a pretty big partnership. So I mean, yeah, those are the things I'd be looking for. But sometimes when you're looking at the market cap and the volume, or the technical analysis, be like, you're not really sure, but you have a feeling it's going to go up, then you buy it. Obviously this is very, very high risk. Once again, please do not take all my words for financial advice. It's not. Definitely not. So that's how to invest. I mean, I'm going very brief, but I'm still taking a lot of time, so I don't know what I'm doing wrong. But yeah, we'll get into like the conclusion parts. But tips and tricks. Stop making so much noise. So, tips and tricks. Don't FOMO in. Fear of missing out. Don't FOMO in. When the price is going up, and if you're looking at it already like an hour or two after the pump, it's bound to go down pretty soon in most cases. So try not FOMO in. If you are going to FOMO, sometimes it might be going up for a long time, sure, but investments don't work like that. if it goes up pretty fast, it's bound to come down pretty fast as well. So you just don't know when and how you're going to time it. So I normally do not recommend unless you have money to burn. You know, it's very, very high risk if you FOMO. Don't panic sell. If you bought something and if you really sure after all the research and all the technical analysis that it's going to go up, just because it kind of suddenly jumped down, don't sell it right away. I mean, that's really case by case. I mean, I can't really say much. Like for example, if you didn't sell at the 15k point for Bitcoin, then you'd be crying right now. But you know, it really depends. Things that go down pretty fast tend to come back up pretty fast as well. Obviously, all these things they work better on more matured kind of investment classes like stocks or commodities. They're not that volatile, they don't fluctuate that much compared to cryptocurrencies in general, because they've just been there for a long time and it's just a bit more stable, and technical analysis is actually possible, and it actually works on these kind of more mature investments. But yeah, I mean, don't FOMO and don't panic sell if you can. Normally, that's what I'm trying to say, is try to look for the long term than the short term. Is much easier that way. Short term is you're always thinking about the time. You're going to be putting all these alerts onto your phone, and yeah, your life is not going to be that fun. I guarantee you that. Don't be greedy, please. Don't be greedy. I can't say this too much. I mean, but you know. Greed actually wrecks 99% of the people. Why they fail is because of greed. You know, my English is crap. Anyways, moving on. Don't get emotional. Be like, if you get emotionally attached to investments, it's the worst thing ever. You can't do anything else. You're always looking at your phone, your computer. You just can't do anything. You can't have hobbies. You can't work, you can't even socialize. It just gets into your head real quick, and you're like depressed half the time. Because if you get emotional, I'm talking about the bad emotional, meaning like, oh crap, it's going down again, you know, all that kind of stuff. So don't get emotional. Try to be rational. Very important. Have some logical reasonings behind your trades, please. Try to be very logical and rational, please. Very important. If you just be like, oh, I think this is gonna go up, and if that's the only reason, you should not do that. You can be intuition based, but you kind of have to have some kind of reasoning behind it, because this and this and this happened, and I see this trend or whatever. I'm not too sure, but I think it's gonna go up. I mean, yeah, that's the kind of flow you should be going through. Not be like, oh, I like the name of that investment, I'll buy that. That's not rational, right? I mean, yeah. So don't do that. Don't believe everything on the internet. I said that before. Just don't. Do your own research. You can use other people's research as your own research, but always cross-check it. You know, don't believe everything. If I say Bitcoin is 20k right now, unless you check it, you wouldn't know. And if you believe me, Bitcoin is 20k, you probably think it's gone back to the previous all-time high and it's pumping again, when it's actually not. People are actually stupid. A lot of new investors are stupid. They just believe everything on the internet. Don't do that. Yeah, don't do that. Anyways, that was pretty much it. It was a very long video. 38 minutes. Oh my goodness. So, just gonna finish it off with CoinMarketCap, one of the most famous sites for cryptocurrency prices and all that. As I said, you know, you got all these terms that I talked about: market cap, price, volume, supply, changes, the amount of change, price change, you know, and the price graph, and you got charts like that. What else? So then you can look at charts. You know, I like to use TradingView. This is the S&P 500, which is the stock market, and that's looking pretty sweet. Oh, It's going up so high. This is scary, by the way. This is really, really scary because I really don't know if that's sustainable. That's been growing like crazy fast over the past few years. Look at that. This was the 2008. This was the 2008 drop. This was the dot-com bubble. This is where the stock. So it kind of double topped here. So double top means it hit the kind of that level, the resistance level twice. So it's a double top and it come back down, but it just pretty much rocketed past the kind of level here and just growing really fast. I mean, this is crazy. I mean, this is why I'm not in the stock. This is why I'm not doing stocks or anything like that right now. It's just very scary. I don't want to be part of that. I really don't know when it's going to crash. Also, not to mention the 2008 financial crisis was 11 years ago. Based on Ray Dalio's economic machine. I really like that video. I'll put it into the description or in the comments down below. Check it out when you want to. But pretty much he talks about the business cycle and financial crisis and the cycles for that. And normally it's 8 to 10 years. So, and we're quite overdue for one. Not saying it has to happen in the 8 to 10 years, but it normally does. And it's been like that ever since. But yeah, I mean, this is just crazy. It's been 11 years. The debt is really high for the US right now. Trump, he's done it again, But, I mean, US was bound to be like that. So, anyways, let's go into one of these. One of my favorite cryptocurrency is called Ripple. I don't know if you knew me for a while, you might have heard me say about it, but let me just show you a few things I was talking about. So I got these kind of charts here. This is called a candle chart. So this is showing me the price over the period of time. Let's change the intervals. See, so man, surely it goes longer. Yeah, so if you look at this Ripple, well, we call it XRP now. XRP has been growing like crazy ever since 2017. This is when I kind of joined. I joined kind of after this initial kind of pump here. You can see is like that. I've kind of joined. I was like watching the prices back then, and I was just like looking at it. I was like, it's going up. Why is it going up? I don't understand. But so I started to do a lot of research. I've been reading and watching YouTube clips every day about cryptocurrencies. Let me assure you that, like, this was the time. 2017 was like when I was fully into crypto. I was like diversifying, finding all these things. Mainly I was on XRP. I was so bullish about XRP. Bullish means very, very positive, or like I think the price is definitely gonna go up. That's called bullish, and bearish is I think the price is gonna go down. So I'm very bullish about it, and I was very bullish about it back then. Obviously it did, like, it just did this. Look at this. It just did this. It just went boop, popped. It just popped, and I joined around here. I actually started putting money in like around this phase, which was a very good phase. I mean, I made quite a lot, but it just popped, but it came down very, very fast. Oh, I wanna cry. Anyways, yeah, so I mean, this chart's not showing me the full thing, but either way, yeah, so the indicators I was talking about, the MACD, kind of shows you like a buy and sell kind of trend here. RSI, once again, the RSI is a very common indicator where it shows you if something is oversold or overbought, meaning if it hits below this line here, then it means it's oversold, so it's bound to go back upwards. And if it hits the top, this top level here, it's bound to go downwards because it's been overbought. Now, these indicators don't always work. I mean, just because it hit that line does not mean it's not gonna fall any further. It might still fall further. It's just giving you the plot. It's just telling you it's been oversold, but it can be sold more. Let's leave it at that. Indicators are just indicators. They're not decision points of, oh, it's oversold, buy now. It doesn't work like that. You need to look in all these indicators, look at the volume, look at the market cap, look at what the community thinks about it and all that stuff. Look at the news, all that, put it together. Then you make a decision out of that. Am I going to buy it or sell it? That's it. But not by a single indicator can tell you buy or sell. I wish it was that way easy, but it's not. So anyways, thank you for watching for like 45 minutes. Hope you have a great day. If you have any questions or if you have any topics you want me to cover, please let me know through private messages or comment down below. Like, subscribe, put that bell alert on for me, so I can kind of tell you, hey, I made a new video, and you can go check it out later as well. Yeah, don't know what I'm gonna say, but thank you. I'll see you next time.